great pleasure for me to introduce our speaker for today, who is going to talk about recent amendments in Schedule 3 and Caro 2020. Mr. Ameet Chedda is a fellow member of Institute of Chartered Accountants of India. He is practicing since 2002. He has professional experience of more than a decade. He is a partner at Dalal Doctor and Associates. He heads the audit and assurance of the firm, which includes internal and system audits. He also assists firm in research endeavor, IFRS valuation. He is also his focus area. He conduct internal audit across sectors such as information technology, chemicals, consulting, shipping, and commodity companies. He has been a member of various committees related to accounting and auditing of various non-profit CA association. He has been speaking on various aspects of auditing and assurance, and is regularly conducting two professional journal on topics related to audit and assurance. With this brief introduction, I request CA Amit sir to take over from here.
I guess he's finding some problem in unmuting his mic, and I'll just try.
Yeah, no, I can unmute. Yes, hi.
Okay, great. Go ahead, sir.
Yeah, so I can, if I can share my screen. Hello.
Yes, sir. Now we can see your screen.
You can see my screen, right?
Yeah, your screen is visible.
Okay, perfect. Thank you, Mira Study Circle, for giving me an opportunity to share my view on revised, amended Schedule 3 and the Caro report. And it's my pleasure to share my view. Friends, you will all be aware that there are a lot of changes has happening over the last 2-3 years. One of the important change which is there is a financial statement along with our audit reports. Financial statement has gone through tremendous changes now. I think what is happening last 2-3 years, we are giving whatever room discussion are there, which are being now brought in the our financial statement. Like for example, when we do an analysis in board meeting related to segment reports, then we have a ratio analysis and all that. All these are now being formed part of our financial statement. So for the ease of this is like very vast topic in terms of a Caro report and Schedule 3 changes. Now that two topic itself will take more than 2 hours, but we will try to take everything in a quick span, and whatever key important changes are there, we will try to cover those, so that we don't miss on the important thing, and which are very insignificant. We will, maybe if time permit, we will take those points. Will that be okay? Yeah. So to start with, like generally we have a financial statement which we cover is the audit report is there, Caro report is there, and the financial statements are there. And in some of the cases we have a internal control reports, which is in few of cases. Now in all the things there are changes. Like in audit report also there are change. In Caro report there's a change, and there's a Schedule 3 where there's a lot of changes are there. Now, for example, in audit report, there are this is the audit report format which we generally prepare. Okay, what I've done is I've highlighted the area where the changes are there. So up till now, we were giving a report till D points, and E point was on the specified denomination notes, which they have removed now, and they have got around no new clause in this. These are mainly on reporting is required basically on when the company has been taking loan, okay, or giving loans to say intermediaries or maybe any entities with a clear direction that that money has to be given further with a to a particular person. or maybe we are providing guarantee and that guarantee has to be given to some other particular person. In those cases, we have to report now those points. Of course, not will not come like regularly. We'll not find any such of transactions in SME practices, but these are the changes which we'll have to understand and we'll have to report that there are no such transaction. So I just wanted to highlight those changes. Then even we have to give an opinion in point number 3 that in our audit opinion whether we have been verified whether this kind of transactions are there in the finance in the books of accounts or not. So these are the three changes which are there, not very critical, but we as an auditor will have to always report those things. And there's one more changes which has been brought on in the main audit report, which is saying that whenever the company has been declaring dividend, okay, whether the company has been complied section 123 of the Companies Act. A lot of compliances are required in when one company issues declares a dividend in terms of like, for example, to transfer those dividend amount to a particular bank account, to an escrow account, then managing the ensuring the liquidity in terms of inadequacy of profits and all that. Those has to be complied with, and we as an auditor will have to ensure that compliance is there, and moreover, we'll need to report those whether the compliance has been completed or not. One important change is this is there, and I think all members should take a note of that. And there's one more change which I think now we get deferred. There was a requirement of maintaining books of accounts on with an audit trail. Now this has been deferred to maybe a next year. So the reporting will come next to next year once the implementation will start. So for the now time being, we don't have to report on the continuing with the audit trail related softwares. So these are the main changes with regard to audit reports, which is a main audit report. And in certain companies, we have a Caro report and ICFR reports. ICFR report, fortunately, there are no changes. We continue with the same as it is. We can at least use this as a copy paste for them last year. There are no material changes there. So I think then the next report is on a Caro report. There are certain clauses which are amended in, I think there are a lot of clauses which have been come in Caro report. What I propose, there are a lot of clauses which are common in Caro report and the Schedule 3. We can take those points along with when we are doing Schedule 3. And I think more important will be Schedule 3 because that will be applicable for all the members, whereas Caro is limited to certain companies. So we take that maybe a later stage once we complete the Schedule 3 related presentation. Now, Schedule 3 is generally they are divided. Schedule 3 gives a format of a balance sheet, which all know. And Schedule 3 is divided in 3 divisions. There are division 1 is related to our normal accounting standards, which we follow. Schedule 2 is related to Ind AS, which are non-NBFC entities. And Schedule 3 is related to Ind AS accounting, which are being followed by NBFC. And each division is generally based on various parts in terms of there are some general instructions. There are some general instruction and a format of balance sheet, which is part 2. Part 3, part 4 speaks about P&L and other general consolidated accounts. So revised Schedule 3 was initially applicable to, it's been applicable to all the kind of companies, irrespective whether it's a small company or a dormant company, irrespective, whenever you are following any financial statement, you'll have to comply with the Schedule 3 requirements. Except there are 3 exceptions if they are in special statute governed entities, like you have a banking company, insurance company, and electricity company. They have their own prescribed format under those acts, which we will have followed there. Then important change which is we have to keep in mind is there's a comparative requirements to be given for previous years. Each and every amendment wherever is there, like for example aging is there, then there are ratios are there. You have to give along with that the previous year figures. You cannot restrict yourself to the current year audit figures. You have to go beyond that and you have to give a comparative previous year figures. There will be challenged for that, but we'll have to live with that and you have to need to report that. Up till now, we were never rounding off those financial figures. Like we used to give exact figures. Now it is mandatory for all the entity to round off. If your turnover, if your total income is less than 100 crore, you have to minimum round it up to 100, and maximum you can round off is to million. And if it is beyond 100 crore, you have to minimum rounding up to lakhs, and maximum can be a crore also. Now, when you will be preparing this financial statement, there could be challenges like income tax department will not accept rounded off differences, rounded off a financial statement for your income tax computations and everything. So along with the rounded off figures, one will have to ensure that we have exact figures also. Otherwise, you will have difficulties in preparing computations and filing ITRs. And one further, like there are a lot of MCA forms where we need to key in those financial figures. Again, those forms will have to be revised, and I think ROC has not as yet come out with those kind of utilities. So one will have to wait and see if there's a how they to roll out those kind of reports. Important thing is, yeah, like when we do a rounding off, say we are following 100 rupees round off, we'll have to ensure that this rounding off is there across all everywhere. For example, you have a director's report, you have a board report, you have a audit report, you have a notes to account accounting policy. Everywhere you ensure that we are following same unit of measurement. You cannot have a different unit of measurement for all of the reports. You cannot have a Caro report, you cannot have a exact amount, and in your financial statement you round it off to 100 or something. So when you do an reporting, please ensure that kind of rounding off is there everywhere. A lot of time you have an amalgamation which is there where you have to provide aging and all that. In case of amalgamation and all that, we'll have to ensure that the original date of purchase and date of sales should be taken rather than date of amalgamation. So that has to be kept in mind. And generally we've seen that a lot of company don't give operating cycle related information. There's a recommended that we give a details of operating cycle, that what kind of operating cycle company is following in the financial statement itself. Okay, now for the easy, like what we have done is just a financial statement which we prepare. Okay, I've amended those wherever there are changes. I've highlighted those things. We can take up those point itself. Like for example, this is a balance sheet format which we follow. Generally, I've seen a lot of companies don't give, they just stop at the trade payable section, and they don't give a breakup of overdue outstanding of MSME and non-MSME companies. Friends, this is compulsory as per MSME Act. May not be applicable as per Schedule 3, but as per MSME Act, one has to ensure that we give on a face of the balance sheet, we have a breakup of a MSME and a non-MSME related disclosures. So this is a small change will be there in the financial statement. There are some changes in terms of those companies which are following Ind AS, where the lease liability will be form part of your non-current liability and current liability on the face of the balance sheet only. For the ease right now, I am not covering financial Ind AS related amendments. In case time permits, we will cover that also then. Small change in profit and loss account. Profit and loss account, earlier there used to be total revenue. Now they have replaced it with total income. Revenue from operation, other income which are like your investment income, dividend incomes and everything. And then the total income will form part of your, they have changed the nomenclature there. We will have to ensure that the rounding off which is there as per 100 crore and all that is based on total income, which is as per the financial statement. So in case you have a, say in any particular you have a windfall gains, so we will and there's a high long capital gains or something, we'll have to ensure that we follow rounding off based on those total income rather than following historically what we've been following rounding off. So we'll have to ensure that. No other changes in cash flow statement. We can continue with the same format. Okay, share capital. From now on, this year onward, we'll have to give a details of shareholding of the promoters. Up till now, we were always giving shareholding details of the shareholders who are holding more than 5%. But now onward, we'll have to ensure that we give a details of all the shareholding of the promoter group. Like what is a promoter group? Promoter group has been defined clearly in the Income Companies Act. They are company name who have been named as a promoter in the annual return of the ROC and the company. Like company every year file the annual return. So whatever whose name is there in the annual return, they are considered as a promoter of the company. And those person who is controlling the affairs of the company will also become a part of a promoter group. So we'll have to ensure we give a detail of the promoter holding, how much shares they are holding, what is the percentage holding they have, and what is the change in the current year over the previous year. So what was the opening percentage which the promoter group was holding, and what is the closing promoter group which is there holding, and what is the change there. So one has to take last year and the opening and the current year's closing. In case there are multiple changes during the year, you did not cover those changes. You only give what was the position opening and what was the closing position, unless that script has been issued for the first time or something. And then there you can use the first and the last holding. This has to be given each equity wise, each class of equity. If it is a preference shares, then you have to give a preference shares also. If you have an equity shares, you have to give an equity shares wise also. So this is a important change. We'll have to ensure that we comply with, and this will be, I think, applicable in all the companies. So I request everyone to take a note of this. Small change in reserves and surplus. Earlier we used to call securities premium account premium. Now it is called securities premium account. So I request everyone to take note of that. And wherever you are using the security premium, like in many times you have an accounting policies, you have an accounting notes to accounts where you use securities premium account. We ensure that we have now used securities premium account. This has been defined securities premium account now. Long-term borrowing, there is a small change there. Long-term borrowing, wherever lot of time, whenever there is a long-term borrowing which is secured, we file a charge with a registrar. And when the charge is satisfied, when on the repayment of loan, we file a satisfaction of charge with ROC. Now, we have to mention whenever there's a loan obtained which is unsecured and the charge has been not been filed with ROC. You'll have to mention in your financial statement which kind of loan where the charge is pending to be filed within the 60 days period. And in case the charge has been satisfied, you'll again have to mention there whether if the charge satisfaction has not been filed with ROC. So charge creation and charge satisfaction both has to be filed with ROC, and if you fail to do that, you'll have to mention this in your financial statement. A lot of time we've seen that a lot of companies have taken loan, then have repaid those, satisfied those loan, but the satisfaction charge has not been filed with the respective bank. You will have to ensure that you speak to your bankers and you get this filed. Otherwise, you will have to disclose this, irrespective whether you have an outstanding loans or not. You'll have to mention whether the charge is there or not. A lot of time when CVC, the company has been buying vehicles or cars on the hire purchase. There also we have to create a charge which a lot of banks don't insist for. Like when you take a loan on EMIs and all that, they don't insist specifically for registration of charge. But you will have to ensure that you file those charge, and otherwise you will have to give disclosure saying that the charge has not been filed with the ROC. Then there's one more small changes there in the short-term borrowing. Earlier, the current maturity of the long-term borrowing was classified as a other liability in the current liability. Now they want us to take this in short-term borrowing itself, so that any reader of the balance sheet can come to know what is the total borrowing of the company. Earlier it used to go to other current liability, so many of the bankers used to miss this kind of reporting, and they were not considering current maturity of a borrowing as a borrowing. So I think this is a welcome change. We'll have to ensure that we change our grouping now for the current year as well as the previous year. We'll have to group this as a short-term borrowing rather than other current liability. So there are two changes for loan-related thing. Okay, trade payable. A major change is there in a trade payable. Earlier we used to always give a single figure of trade payable, and we used to give disclosures of MSME related disclosures. Now, apart from this, we have to ensure we give aging of the trade payables. What are the various outstanding on a different year bracket? We'll have to give those details. Apart from that, we have to give a details of how many was the undisputed and disputed with respect to MSME and other dues. So there are multiple kind of reporting is there. You'll have to dig in the audited on the accounts of the company and understand which are the disputed one, which are the undisputed one. Out of again, how many are MSME, how many are non-MSME, and then you have to give a details of trade payable which are not due for payments, because if it is not due from payment, it cannot be bracketed in this kind of aging. It has to be disclosed separately because the due date of payment has not come. And any unbilled revenue, dues, like you have a dues which the supplier has not made a bill or something, you'll have to give a separate disclosure for that, so that the aging reconciles with the total aging reported in the trade payable. Then there are a lot of disclosures in terms of disputed and undisputed. Now it will be very difficult for anyone to arrive at how many are disputed. What is the disputed? Is it like only a court matter which is disputed, or any internal party dispute? Like for example, I have accepted the product, but I am not satisfied with the quality, and I have given a communication for that. That is also form part of your disputed liability. So each and every transaction again will have to be bifurcated. So it may happen that a particular customer, certain bills will become a disputed bills and certain will become an undisputed bill, and you'll have to bifurcate according to the aging based on whether it's a disputed and work with the chartered accountants and the company especially to identify which are dues which are disputed and undisputed. And it's not necessary dispute should be only represented in a court. It can be with within the parties itself also. So and apart from that, this kind of reporting is required for the previous year also. So you'll have to again go behind, and the last is also aging. You'll have to check and then do a proper bifurcation of entire trade payable in the various aging bracket. So this is a small change. This is a change in trade payable. So unbilled, disputed, and okay. Now once see now how dynamic this financial statement will become. Now what will happen once you give anything which is beyond say 3 years or maybe 2 to 3 years, the income tax department will straightforward will have a details like how many are creditors which are not been paid. So you will have an impact in your your assessment also in your income tax department also. Apart from that, again, like whatever amount which is there outstanding for more than 1 year, I think we'll have to as per GST law we have to reverse those credits, input credits when we have not paid any supply beyond 6 months or 1 year something. So there also, if you start reporting those details, immediately GST department will have those details and they will force you to reverse those credit in case you have not reversed, and then there will be a penalty proceedings and all that. So I request everyone to take care whenever they are reporting anything beyond 1 year. You have to ensure compliance with related to other law also like GST and income tax as we discussed. So I request everyone to take please have a proper scrutiny on those accounts which are beyond 1 year. So I think this is on trade payable, very important change, and will be applicable for everyone to take care of. Okay. Next is on property, plant, and equipment. Very detailed analysis will be required henceforth for on a capital WIP. Now, up till now, we were only restricting ourselves to mainly on the financial on the property, plant, and equipment in respect to your broader heads. Now, a lot of stress has been put on a capital WIP. Like capital WIP have to be bifurcated again with respect to your project which are in progress and project which are temporarily suspended. And again, you have to give an aging for that. So what happens, suppose you have ongoing project, say you're erecting some plant or machinery, and then there have been 2-3 years you have been spending a lot of amount on that. You have to give an age for each of the plant and each project, and apart from that you have to also give a same detail for the previous year also. So I will have to be careful to give details which are project which are in progress and which are in temporarily suspended. Now temporarily suspended means like you have started work, but as on balance sheet date you have stopped the work because of some particular reason. Maybe there are some lockdowns or something, you have suspended the project. So that will have to be reflected in this. So again, this will have a very qualitative information with the reader of balance sheet. They will be very easily come to know how many projects which are there, which the management has suspended over the period of time, along with the aging since when it has been suspended. So these are very welcome analytical points are there. Again, point to be remembered is these are as on 31st as on balance sheet date. So in case any project which is there suspended throughout the period, throughout the balance year, but has started again as on end of the year, then you need not report those things. It will be treated as a project in progress, and it will be classified there only. There could be possibilities that some project which are suspended for the temporarily in the current year, but in the previous year, in the current year it is going on, you need not give those information in the current year. At least you give those information for those projects in the previous year. So that is capital WIP. Then one more important change is that now onward, earlier we used to call it fixed assets, and a lot of places when we read notes to accounts or maybe an accounting policy and all that, there we continue to write fixed asset. This has been changed now. You need not write fixed asset. It has to be called property, plant, and equipment, and intangible assets in wherever intangible assets are there. So ensure that you use same nomenclature across the board everywhere. And in case of a project is overdue, like there's sometime you have estimated the project will be completed within 3 years, and you are not been able to finish those project within 3 years, and you are going beyond that, or maybe there's a cost overrun, like you estimated some X amount and you have already spent X plus Y amount. You have to give a detail of those projects separately, and that has to be given a project wise, that which project name and how much you have spent on that, and how much time will it take to be completed. So those kind of information also will have to be given in case the projects are suspended where the project has been overrun. So we have two bifurcation. One is a project which is in progress and temporarily suspended, and then project which are overrun, where you have to give a details of project wise. And similar kind of information is there for intangible assets which are in development. Similarly, like how we have a WIP. So I think this is a broad changes in your fixed property, plant and equipment related stuff. Do we have any questions on this, or you want to take all questions last?
So we will take all question last. In case if there is any question in chat box, then I will let you know, sir.
Then there are no major change in non-current investment related activity. Deferred tax continues same as it is we have. Long-term loans and advances, there are no changes. Other non-current assets, security deposits. Earlier we used to classify this as an other long-term loans and advances, or maybe current loans and advances. Like you have a property deposits for a rental and all that. Now you have to consider to be a head as a separate head as a security deposits. You need not club it in other current other loans and advances, which is a welcome change because this is not in nature of your loans and advances. Okay. Again, there are trade receivable aging, which will take subsequently. There are no changes in investment, which are current investments. No changes in inventory as such. Okay, trade receivable. There are a lot of major change in trade receivable. Similarly, like we have a aging in trade payables, we have to give an aging in trade receivable also. Again, bifurcated between disputed receivable and undisputed receivable. And then we have an aging bracket. In this, we have one more aging bracket, which is less than 6 months, which was not there in your trade payable. Your unbilled receivables and not due receivables have to be shown separately, and that is how you will be able to reconcile your total with your financial statement totals. And in case a provision is there, you have to mention separate provision in this case. And these amounts will be grouped on a bill basis, not on the net of provision basis. So this was there in your trade receivable related thing. There are no changes in cash and cash equivalent. Short-term loans and advances continues, except for the security deposit, which we have moved to current separately as a separate deposits. There are no changes in other current assets. So this was with respect to your all the changes which are there in your balance sheet. In P&L, there are not major changes. Revenue from operations, other income, all continue the same way which we used to report. No changes in other cost heads, and we continue the same. There are no changes in other disclosure with respect to auditors, remuneration, contingent liability, earning per shares. We continue with the same. Import CIF values, we continue with the same. Related party disclosures, I've seen a lot of balance sheet which are not covering, like, if you read institute publication on commonly made mistakes by the companies by preparing financial statement, a lot of companies not given a related party disclosures. All the company will have generally a related party disclosure, especially for a director remuneration at least. So we should ensure that we give a related party disclosures, and that I think there are a lot of places where this kind of reporting will come. So this will cover all those kind of reporting. There are no changes in lease rental related payment, earning per share related, KMP related disclosures. There's a small change in CSR related disclosures. So Schedule 3 has covered now what are specific requirements for for CSR related disclosures. This earlier we used to follow institute guidance note for disclosures on CSR related, like what are the amounts which are unspent, what are the amount which are spent to be on project which are long term projects. Now there are separate disclosures again given by Schedule 3 itself. You have to follow those, and we have to also follow the institute guidance notes disclosures, which are more in detail and more elaborated. So I think that will help the reader of financial statement to understand on the CSR projects. Small change in CSR, but I request everyone to take a note of that. No changes in your employee related termination plan disclosures, which continues with the same as last year. Okay, there are a lot of additional disclosures requirement has been brought in. We need to cover those those things which are in details. The most important is the ratio analysis. Now, from the current year, we have to give a lot of ratio. There are around 9 to 10 ratio which we have to give. in our financial statement itself. So the reader understands they don't have to do their own calculations, and they are reasonably easier ratios. They are more on liquidity aspects and on the profitability ratios. As per guidance note, ensure that we give a what is the nomenclature which we have used for denominator and numerator, and we define those clearly so that the reader understand how the figures have been considered for various ratios, and this ratios has been given for current year as well as the previous year. So this will have to ensure that we follow same nomenclature and same heads for each and every ratio. Apart from that, we have to ensure that whenever there's a change in the ratio which is more than 25%. So for example, in the current year, we have a ratio 1:2, and the next year it becomes 1:2.5. So there's a change which is more than 2.20, more than 25%. So apart from highlighting those ratios, you have to also give an explanation what are the reason as per management, the reason why this ratio has changed significantly. So in case there is a change in net profit ratio from sales, so you have to give a details why there is a significant change which is beyond 25%. So it could be change in product mix, or maybe there are some abnormal expenditure this current year which we have incurred. So we have to give detail of those. We have to give a reason for those changes. So there are various ratios, around 9 to 10 ratios are there. So there, and the institute has given a guidance note on this how to compute those ratios. So in case one want to verify, you can definitely check those guidance notes. Then there's a change in undisclosed income. So whenever there's a undisclosed income which the SSC has surrendered, the company has surrendered with the department, we have to give a disclosure of those income, and whether the company has given those effect in the financial statement. So in case there's some assets which have been found with the company, we have to ensure, and those assets have not been recorded. We have to ensure that those assets get recorded, and we have to give a disclosure whether the assets have been recorded properly or not. Wherever there's a requirement to account those assets. And there are a lot of time you have a surveys where the company makes some statement, they agree to some additions, and then later on they retract those statements. So those need not be covered because those are not been accepted by the company. In case company has filed an appeal for particular additions or something, we have to ensure that those also not getting covered in this. So we have to give a detail wherever there's an undisclosed income and accepted by the company. There are certain disclosures requirement has been bought by for the cryptocurrency and the virtual currency. Last year we had a lot of taxation which have been bought in for the cryptocurrency. The company have been asked to give a disclosures on how much profit they have earned and what are the closing balance cryptocurrency they have. Revaluation of assets. Whenever the company is following revaluation model as a accounting, and whenever they are doing year on year revaluation, one has to ensure that the revaluation is based by the valuer, register valuer, and whenever there is a change in which is more than 10% of the value of the assets, so we have to get it done through register valuer, and necessary disclosures has to be given in the financial statement also. Loans and advances in the nature of granted to promoters. Earlier also we used to give this reporting, but it used to be through a separate section of 185, 186. Now the company has been asked to give this disclosures as per Schedule 3 itself. So we have to give how to highlight how many loans which are repayable on demand. So there are a lot of loans which we take from the promoters and all that, and there is no fixed term in terms of how much will be repayment on year basis. We have to ensure those kind of loans where there's a on demand, we have to ensure that we give a high disclosures of those. And when there's no terms itself mentioned, and it's a perpetual loan or something, one has to give a disclosures in the part B of this. Part A will be on repayable. Whenever the company wants to demand the loan repayment, that will come under part A, and part B will be on the without specifying any loan repayment terms. A lot of stress has been put in on Benami properties. A lot of things are there in Schedule 3 also. Similar kind of schedule disclosures are there in your Caro report also. In case the company has any officer has initiated any proceedings on the Benami transactions of the company, one has to give a detail of those properties related aspect. This starts when any officer has started the proceedings. Not you don't need to start digging up transaction which could be a Benami transaction or something, one has to start as soon as the initiating officer of the Benami under Benami Act starts his proceedings. So there are some requirement in terms of which kind of properties are there, what are the amount involved and all that. Those kind of disclosures has to be given. Borrowing from banks and financial institution on security of current assets. So a lot of time we have company borrows funds from banks on the security of current assets like stock, debtors and all that. And the company is required to submit on a periodical basis, on monthly basis, a stock statement on which they get a drawing power. But we used to check those kind of statement in audit before also, but now whenever there is a discrepancy on the documents which have been filed by the bank, by the company to the bank, and those details does not tally with the financial statement, one has to give a report on those also. So whenever there's a discrepancy between document filed with bank and as per books of account, you highlight those discrepancy in your financial statement itself. Now this has to be done on a quarter end basis. It could be it is June, December, September, and March. So each quarter you have to ask bank what have been documents submitted with the ask the company with what are the documents they have submitted with bank. Compare it with your books of accounts, and if there's a discrepancy, you give the detail of discrepancy along with the reason for material discrepancy. So your job doesn't end to just highlight the discrepancy. You have to give a reason for discrepancy also. Now the reason could be like change in valuation method, or maybe you have not done a revaluation of our debtors, or maybe of foreign debtors and all that on the each quarter end. So there could be a reason for that. So you have to give the details what are the material reason for changes for the discrepancies. Now this has to be done on a quarter end basis, need not be done on every month end. So even though bank must be asking for each quarterly basis, a monthly basis statement, but you have to restrict yourself to a quarter end related statements only. And what if now you have sanctioned the amount, but the company has not used that money, or maybe they have not borrowed from the bank. In that case, if during the year there's at no point we have no borrowings, then we can ignore this reporting. Otherwise, if there's on a single day also there's any amount which is outstanding, you have to report this kind of discrepancies if there. Then there are willful defaulters. In case your company has been declared as a willful defaulter by a bank or maybe any financial institution, then you have to give a detail of those default disclosures, like what was the date when you were declared as a willful defaulter, and detail of amount and everything. So one have to be, of course, this will not come on ever all the companies as such, but we'll have to keep in mind those kind of disclosures. Relation with stuck off company, very important change, and a lot of UN cry on this reporting. What is happening? The Schedule 3 requires company to disclose any transaction which has happened with stuck off company. Like the company has been stuck off by the name because of any non-compliance in respect to your annual filing or whatever may be. Whenever there's a transaction with those company during the year, you have to give details of disclosures of how much investment you have in that company, how much receivable you have on 31st of March, and what are the various relationship with those company. Are they related party with you? Like all maybe a management is holding some securities or there or something. You have to give a disclosures of your relation with those stuck off company. So there are each ROC of there are some 8 to 10 ROCs which are there in India. They come out with on a yearly basis, they come out with a list of stock of company. You have to take those stock of company list and check whether your transaction, it could be your sale, it could be your purchases, it could be your investments only. Wherever there's a transaction with your any stock of company, you have to give the closing balance detail of those company, and will be a task for everyone, because the list which is there, which is very long from the ROC, and you have to do a manual check of all the transactions which are there with your company, with those company. Like for example, you have done any sale with any of the party, you have to manually check those things in your in the list which has come out with the ROC. So I think we are task for everyone to do, especially for the companies which are listed company. They have n number of customers and suppliers. You have to check for all of them. There are a lot of representation which have been gone to various ROC to give a consolidated list with a CN number which can be used for finding our own supplier and customers. I think ROC will come out with some kind of listing then. Then a lot of there are a lot of section in Companies Act which one has to comply with, and now those reporting will also come. There are few of them is like a layer of company. Section 185 has a limitations on the layer of a company which is one has to follow, especially in investment companies. Whether the company has followed those sections, and there are no multiple investment layers of the company. One has to give a report on that. Compliance with the approved scheme of arrangements. So a lot of time court used to take a declaration from the statutory auditor that the accounting policy which company will follow will comply with the accounting standards. Now that has to come in the financial statement itself. You have to company will have to give a report on that part also. Then there's one reporting on which was there in the main audit report on the taking loan or giving loans with a specific clear direction that has to be followed, that has to be utilized for a particular purpose. Then those kind of detail has to be given now. So part A is related to loan taken, loan given, and part B is related to loan taken by the company with a clear direction. Then the company has to disclose certain aspects which are there in the Schedule 3 itself. I don't know how important this change will be, but one has to keep in mind whenever there is such kind of transaction is there. This has to be audited and has to be reported in our own main audit report. So please, I think everybody will have to take care of that. Then whenever there's a amount which has been proposed as a dividend for the equity shareholders, we have to give a detail of those proposed dividend. Earlier in old schedule 1956 Act, we used to provide for those dividend. Now onwards, we are not providing for those. We are not making specific provision in the financial statement. However, as per the accounting standards and all that, we have to give a disclosures of all those dividend which has been proposed by the board of directors, but will be approved by the company later on. Then when there's a company has issued, it could be preference shares with a specific purpose of saying what are the purpose of issuing those equities and fundraising. One has to ensure that those amount has been utilized for that particular specific purpose only. There's no misappropriation of those funds, and we have to give a disclosure in the financial statement for those kind of misappropriation, if any. Then similar kind of disclosures are required when there's a borrowing from a bank and those funds have been misappropriated or not used for any particular specific purpose. We have to give a disclosure of those. And and whenever there's any plant and fixed asset or maybe plant and property and equipment which are or maybe non-current investment which are not which cannot be realized on the same value as per balance sheet, then we have to give a disclosure of those things. I don't know how company will on a year-on basis will have a compliance of this. And the last important change is there is the title deed of immovable property. In case the company is owning some assets, okay, and that assets are not in the title deed of the assets are not in the name of company. We have to give a disclosures of those various stuffs are there in terms of what was the carrying value of amount, why the total deeds are not being held in name of the company, and the if it is in the name of directors or promoters, we have to give a separate disclosures of those. And this has to be given even for the property which are taken on a lease. However, the lease is not in the name of the company. So it may happen that a lot of time we take the property is owned by the directors and the company has taken that property on a lease from the director. They are paying a rent, but since the parties are both mutually agreed and they don't have formal written lease agreement, so one has to be careful kind of this kind of compliances. This kind of compliance, this will have to be reported. Property taken on a lease, but the property there's no lease agreement to that. So one has to be very careful and ensure that you have a necessary agreement with your director so that this kind of disclosures doesn't get affected there. Okay. So these were the broad changes in the Schedule 3 disclosures. The important main which are ratios which we discussed, and so ratios one has to be very careful, and those are to be given for the current year as well as the previous year, and a lot of analysis can be done through these ratios. Now we can go to changes in the Caro. There are around a lot of changes which are there in Caro. Okay, so just to give a brief on the Caro, new Caro. Caro is applicable from financial year 21-22. So whatever accounts which you are going to sign now for the last March 22, we will have to ensure that we issue a new Caro report. Initially, it was proposed for 19-20 financial year. Now it has been deferred due to various reasons. This is now applicable from the current year. This is applicable to all company. There are some exceptions, which are small company, which are key exceptions, which are small companies, special like company like banking, insurance, and those companies, and charitable companies like Section 8 companies, and the company which are where the public money is not involved. So what is companies which are we have described what is a small company and what is a companies with a public money is not involved. The small companies are a lot of company which are paid up capital is less than 2 crore. Earlier it used to be 50 lakhs, now it has been to 2 crore, and turnover is less than 20 crore. Earlier it used to be 2 crore, now it has been increased to 20 crore. I think this increased limit is very significant. Now a lot of companies which come out of this they become a small company, and there are a lot of relaxation in terms of holding board meetings and the Caro reporting. For those companies, the Caro report will not be applicable. So you'll have to assess whether the company is following any of this, if complying with both the condition, then you need not comply. You issue a Caro report. The company where the public money is not involved, they are like private companies, which is not a holding or a subsidiary company of a public company. The loan from a bank or financial institution is less than 1 crore, net worth is 10 crore, less than 10 crore, and revenue is less than 10 crore. So one has to, if you are complying with all this condition, you become a company where the public money is not involved. And again, you get an exemption from Caro reporting. Consolidation account, Caro is not applicable except for one clause which is there in Caro. You have to give a reporting on that clause in the consolidated account. Rest of the clause is not applicable for consolidated accounts. There are around 49 clause now. 16 are similar to like what we used to report in the old Caro. Sort of almost like one half of the Caro has been changed now. There have been 28 new clauses which have been introduced. 5 clauses are be there with a minor amendments are there, but very important amendments. And there are 10 clauses which are there which we report as an auditor, as well as that get reported in the financial statement by the board of directors. Like whatever company is for reporting, there also has to be reported. So there are two dual reporting. One is in the audit report, and the one is in the company reporting. Now, for the to complete in a good time, what we can do is we just cover those which are changed, and when there's a new clauses come up. So this is the first. We earlier used to only report a property, plant, and equipment, whether the fixed asset register was maintained or not. Now that has to be done for intangible assets also. So in case the company has a lot of softwares, okay, or maybe they have purchased some copyrights or trademarks, we have to ensure that we maintain proper records of those intangible assets, the way we used to do it for property, plant, and equipment. And the locations and everything has to be maintained, like where those software have been implemented, and those kind of things also has to be mentioned in that register. Especially like from the next year onward, when there will be a clause on a with audit trail, one has to ensure that this register also is under audit trail, and there's no editing is possible unless there's an audit trail to that. So this one has to ensure that this kind of compliance is also there for your intangible assets and tangible assets. Then physical verification of assets, which was there in last year, we continue with the same kind of reporting. Okay, there's a new change which has come with this respect to title deed. The way we have in financial statement, again, here also, whenever there's an immovable property taken bought by the company, maybe on a lease or purchase, and the title deed is not in the favor in the name of company, one has to give report of those, and the detailed format has been there in the Caro report itself. There are this kind of disclosures has to be given. So whenever you find some property which are taken on lease and the lease is not in the name of company, you have to give a disclosure of those things. In case property has been on a mortgage with a bank and everything, banks and financial institution, one has to take a confirmation from respective bankers. And in case title deeds have been destroyed, or maybe they are lost or something, then you have to take a necessary necessary FI reports from the management, or maybe you take a necessary representation, and or maybe you do a search with the register of properties and ensure that the title deeds are there in the as per the company's name. So this is a new amendment again, which is there in your financial statement also. In case you have been following revaluation model of accounting, then if in case the change is more than 10%, whether the valuation was done by the registrar valuer, you have to give a disclosure for that. Then again, like we have in financial statement, Benami reporting, Benami transaction reporting, similar kind of reporting is required by the auditor also. In case there is any proceeding has been initiated by the any investigating officer, you have to give a detail of those transactions. Then we always used to report on the physical verification of the inventory. Now we used to always used to write material differences which has been whether discrepancy have been whether accounted or not accounted. Now the Caro has defined what is a material discrepancy, and if discrepancy is more than 10%, you need to give a detail whether the properly accounting treatment has been done for that or not. The way we had in financial statement working the comparison of the book stock submitted with bank and the books of accounts, similar kind of reporting is there for your audit report also. In case company has taken a working capital loan, in the financial statement used to be all kind of loan. In Caro we only restrict ourselves to be working capital loan, and the amount is 5 crore rupees, which was not there in your financial statement reporting. In case you follow, like you have a working capital loan and you have a borrowing is more than 5 crore, and this is sanction limit, not the actual borrowing, then you have to compare the statement which has been filed with the bank and what is there in your books of accounts. And in case there is a discrepancy, you have to give those detail of discrepancies. So these are dual reporting. One, it will come in financial statement also, and it will come in your Caro report also. You will have to follow both of them. Then there are a lot of disclosures required and a lot of auditing reporting required with respect to loans given by company, investment by the company, or maybe a guarantee given by the company. There are around 6 sections with the subsections. Each section has a different thing which has to be reported. For example, in case there is a financial transaction which includes your investment, loans, guarantees with the company, whether it's a related company or an unrelated company. So in case a loan is there, you have to give details how much is the loan to subsidiaries or related parties, and what are the loans which are given to other parties. So this is in line like with section 185, 186. 185, 186 only covers loan to related parties. This covers loan to anyone. It could be your employee also, or it could be your subsidiaries, or it could be any party where there's a loan given. You have to give a proper disclosures of loan given by the company, and you have to give the detail of balance outstanding during the year. What was the highest amount which is there throughout the year? One has to give detail of those. It's just a disclosures. You don't have to report anything on prejudicial to the company in this clause. Then in case the company has made any investments, okay, or maybe has given a loan which is prejudicial to the interest of the company, that has to be reported in clause B. So this is now the coverage has been increased a lot. Earlier we used to only report when it used to be loans to related parties. Now we have to give loans and investments also is covered now. Whenever there's a loans or investment which is unrelated party also, one has to give whether it's in the prejudicial interest of the company or not. So it may happen that your company is investing in a company where the company is in loss. The investing company is a loss-making company. You have to do an assessment whether that will be a prejudicial to the interest of the company. So you need to ensure that you have a proper valuation reports with you, and you have done a proper due diligence. Again, you have to comply with the section 185, 186 limits, which is there as per Companies Act. In case you are not complying with those limits, again, those will become a prejudicial to the interest of the company. So this covers everything, investments also, and the loans and advances also. So one has to take very care on those kind of disclosures. So a lot of companies even have investments in the listed equities and all that. So those one has to take care that they ensure that it should not happen that the company is starving for the liquidity, and then those money have been utilized for the purpose of investments in equity or something. Again, that will become an prejudicial interest of the company. Okay, when in respect of loan, the repayment schedule has been stipulated under the issue. Just a minute, second. Okay, when the company has granted a loan and the repayment has been prescribed by the company itself, there's a EMI schedule and all that, and whether the borrower has been repaying as per the terms of repayment or not, one has to report on that. So in case you have given a loan to say your employees, and you have a terms like within 2 years or 3 years you have to complete those repayment, one has to give a detail if they are repayment is regular or not. And it could be like your loans to your subsidiaries and with the related EMI disclosure detail stipulation. One has to ensure that the repayment is there as per stipulation. In case the amount is overdue more than 90 days, and in what are the steps which a company has been taken, and what are the amount which are involved in that overdue amount, one has to give a disclosure of that thing also. There are a lot of time we have a evergreening loan. You have a loan which is outstanding that the borrower is not been able to repay that amount, so you give a further loan. So that is also now we are to report. In case there's a loan has been extended or renewed or maybe settled with a fresh loan, you have to give a detail of those borrowing also. You whenever there's an evergreening loan is there, we have to cover those and report separately. And whenever there's a loan which are repayable on demand or without specifying the term of repayment, you have to give a separate disclosure of those things. Similar kind of disclosure is there in your financial statement. So there will be a dual reporting, one in your audit report also and one in your Schedule 3 also. Okay. In case a loan have been, whether the company has complied with the section 185, 186, 185 is on the loan to a directors or maybe related parties, and 186 on the limits which company can lend or maybe invest. Whether the company has been complied with those kind of section 185, 186. There are certain exemptions to private limited companies. There are some circulars. I request everyone to take note of those circulars, and in case you are getting exempted under those circulars, you need not report this thing. Otherwise, whenever there's a non-compliance, you'll have to give a detail of non-compliances. And in case there's a compliance, you have to write a compliances there. Similar kind of reporting is required for your loans taken, like those loans which are in nature of deposits. There are section 73 and 76, 73 to 76, and there are deposit rules are there. If case you are any violation is there in those loans and those are treated as under deposits, you have to give a detail of those non-compliances, and then whether the company has filed the deposit returns and all those things of compliance has to be followed. So one has to report whether the company has been complied with section 73 and there are no deposits, or if there's a deposit, whether the section has been complied properly or not. Again, there are certain exemption to private limited companies in terms of your borrowing from directors, borrowing from the shareholders. I request everyone to have a review of those limits and exemption, and then accordingly one has to report there. Then a cost account maintenance. Last year, up till now, we used to always report undisputed amount and a disputed statutory dues. We had continued with the same thing. There are no changes in there except for the GST has been added in both the section. One more new clause has come with respect to which is there in your financial statement also. With respect to your undisclosed income. In case the company has surrendered or disclosed some income which is as per assessment of income tax, and whether the proper accounting treatment has been given for those undisclosed income, one has to give a report on that. Then there's one more clause which has changed now. We used to report in case there's a company has defaulted in loans and borrowings, and the default we used to report whether what was the nature of borrowing, what was the amount offered as security, how much was the default. Earlier, we used to restrict ourselves to bank and financial institution. Now we have to cover all kind of lenders. It could be NBFC or it could be private loans also. So whenever there's a private loan which is accepted by the company is accepted, and we have not been able to, there's a default in repayment. So one has to cover those defaults also, which was now the scope has been widened by the new Caro. So everybody please have to take a care of those things also. Then one more clause is there, which is similar to our financial reporting. If the company has been declared a willful defaulter, one has to give disclosure of those. There's one more which is new the new clause is there, which is similar to financial statement reporting. The term loan which has been applied, which has been obtained by the company, whether that same has been applied for the specific purpose which was taken by, and it is cover only term loans. This doesn't cover your working capital loan, and so whenever there's a term loan which company has accepted, one has to ensure whether the same has been utilized for the specific purpose and there's no misappropriation. Generally, in term loan, the banker ensure that the payment directly goes to the respective vendors and all that. Then it becomes very easy to verify. However, in case there are some the bank which follows transferring that amount to current account, then in that case one has to be very vigilant and ensure that we report correctly there. Then there's a new clause which is there, which used to be there in earlier Caro 2013. They discontinued it from 2016. However, they have again brought in the 2020 Caro. Whenever there's a company has raised a funds which are on a short-term basis, so they have a working capital limits or maybe loans which are specific purpose of for the working capital only, and they have been utilized for the purpose of long-term purposes. So you purchase say machinery or plant or something, or maybe you start investment in a subsidiary. A long-term investment is there. Then in that case, you have to give a detail of those misappropriation. But this has to be restricted only for the with the respect to short-term loans and not for the long-term. So it's not a vice versa. So in case long-term loans have been used for short-term purposes, then they need not be reported here. Only short-term loan taken and used for the long-term purposes has to be considered for this reporting. So one has to be very vigilant on the analysis of balance sheet. They have to ensure that the short-term, the current ratio of the company is in the range of 1:1 at minimum. So whatever loans are there, they are represented with the working capital utilization by the company. So this new clause has come, and there's one more new clause which is there, where the company has taken funds from the entity to meet the obligation of his associates or joint venture. So there's a specific direction by the company who's a lender, with the saying that that fund will be utilized for the purpose of investments or maybe a loan to subsidiaries or associated. We have to give a detail of those the funds when we have taken those kind of funds. When the company, there's a new clause which is there, that when the company has raised a loan and they have pledged their shares of the subsidiaries. So for example, the subsidiary is a listed company and the company has taken a loan on the basis of those shares of the listed company. Then you have to give a disclosure of those borrowings, like what was the amount of borrowed, what was the securities have been offered. So this is very limited implication, but one has to keep in mind and accordingly one has to report. Now, the way we had a reporting in clause C saying that the term loan, whether they applied for the purpose of what a specific purpose. Similar thing is there for funds which are raised for IPO. So company has raised an IPO or maybe FPO. It could be debt related or it could be equity related. One has to give whether proper utilization is there. There is no misappropriation. Whatever prospectus says will be utilization. One has to ensure that the proper utilization has been there according to that. And similarly, there's a preference allotment. Like many times the company has especially private limited companies, they issue shares on a preferential allotment or private placement. Again, there also one has to give now what was the purpose of issuing those shares. We have to ensure that there's a compliance section 42 and 62, and whether the utilization of that funds is been whatever promised under that instrument we have done follow, and there's no misappropriation. So with this, what is happening, whatever source of funds are there, it could be your IPO, it could be preferential equity instrument, it could be debentures, or it could be a convertible debentures, whatever may be, or it could be a term loans. Then you have to ensure that the proper utilization is there and they properly reported in your Caro report. Only thing which is left off is now working capital limits which have been taken from a bank, which comes under short-term loan used for the purpose of long-term or not, that we have covered under this clause, but specific purpose is not required under short-term working capital. So now I think all source of capital has to be utilized as per promised by to those respective thing. Okay, then there's a clause which has changed on a fraud. Earlier we used to report fraud on the company by the employee, or only we used to restrict to the fraud which have been done by the employee of the company. Now the report all kind of fraud which has been reported by the company. Now it could be like your vendor has done some fraud transaction with the company. You have to ensure that that will also get covered. Even though earlier we used to not cover those because they were not employee of the company. Now we have to cover those fraud also. Then there are requirement of filing ADT forms, ADT4 forms with ROC when there's with the central government when the fraud is more than 1 crore. And when it should be less than 1 crore, we used to report it to board of directors or maybe the audit committee. Now we have to again report here also whether the auditor, like the firm which is doing audit also, and they only have to report whether the firm has filed in ADT4 with the central government as prescribed within 60 days. So one has to take care of reporting will be there in Caro also. And there are some companies where the whistleblower mechanism is there. One has to ensure that whatever whistleblower complaints are there, whether they have been taken care when you are finalizing your accounts and they have been given a proper effect in your financial statement. And in case you are not giving any effect to those whistleblower complaints, or maybe you are not taking into consideration, then you have to give a disclosure for those things. Then there are some requirement with respect to Nidhi company that they have to maintain certain ratio. I think Nidhi company has a very limited exposure, so I think we can skip for the time being. But there are 3 clauses which has to be reported under the Nidhi company. There is we issue report on a section 177 and 188 related party transactions, and whether proper disclosures has been given in financial statement. We continue with the same reporting in the new Caro also. Then there are 2 new clauses has been introduced, which was there in earlier 2013 Caro, but was not continued in 2016. Now one has to again report on the internal audit system, where the company is there and covered under the internal audit requirements. One has to ensure that the internal audit is there, which is commensurate with the size of the company. Again, one important thing is that it has to commensurate with the size of company. So a lot of time it may happen, just for a compliance sake, a lot of company just appoint an internal auditor, and the reports are not maybe with a significant findings, or maybe they are not covered properly. Those may not covered under commensurate with the size of company. So one has to ensure that we report those, whether the audit is commensurate with the size of the company. That has to also be reported. And we also have to report whether whatever findings of the internal auditors are there, whether those have been considered by the statutory auditor, while filing the financial statement. So in case there are some accounting errors, or maybe some policy requirements to be done as per internal auditor, and we have to ensure that we take care of those reporting, and we ensure that those are they are rectified in the financial statement. Then we had to, and as per old Caro, we had to report on the transaction with the non-cash transaction with the directors. We continue with the same reporting again. There was one reporting which was there on the RBI related section, the NBFC compliances. Like a lot of if your company is in a finance company, and the company has been earning say 50% or more than 50% from the financial instrument, and the assets of the company constitute more than 50% of the assets of the company's financial instrument, then you have to register with the RBI under section 45(1)(a) IA, whether the company is registered or not. You have to give a report. And without registering, if company has carried out such kind of activity, we have to report in the clause B. Then there are some core investment company which are considered to be an investment company of or maybe a group holding investment company. There are some reporting requirements for in new Caro there also. So those where this application is there, one has to be reporting those things. Then there is one more. This was there in the earlier 2013 reports. Again, discontinued 2016. We have to report in 2020 now. In case the company has incurred a cash loss, then what is the amount of that cash loss one has to report. This has to be done in the immediately preceding financial year also. So in case last 2 years or current year you have a cash loss, then you give a proper disclosure for that along with the amount of the previous year. Then we have seen a lot of cases when on the last moment there are some auditors who are resigned from the listed company, and they don't give any specific reason for that. So the new Caro report required, in case there's a resignation from the old statutory auditor, one has to ensure that whatever his objections were there, or maybe concerns were there, we address those concerns in our financial statement if required. Like in case the company has been not the old auditor has resigned because of some non-availability of documents, and which are very key documents, we have to ensure that we take into those consideration and we report. In case wherever there's a qualification required, we have to ensure that we do that. So there's a very important change which is there. One should ensure. So what we can do is, whenever there's change in auditor, generally we do a communication with the previous auditor about his objections and all. There also we should ensure that we have a specific paragraph saying that we, as per Caro report, we are required to consider your objections and a concern. Hence kindly let us know in case you have anything. So that will clear communication will help whenever there's a questions on our auditing scope and all. So I think this will help the members to comply with this kind of reporting. Then we had a lot of ratios in the financial statement with respect to your current assets, current ratios, and net profit ratios. Now, after analyzing those ratios, we have to we have to do an analysis of the ratio, and we have to report whether, as per auditor, you see any material liquidity issue of the company. So in case there's a company will have a stress payment on a liabilities, then we have to, and we report those things. Again, similar to like going concern thing, like whenever we have a doubt on the going concern with respect to your ratios, we should report those liquidity issues. Okay, then there's again in the three new points are there, which is respect to CSR. In case the company has ongoing projects which are for charitable activities, and the amount has remained unspent on 31st of March, then one has to ensure that that amount gets transferred to a separate bank account. Whether or sorry, that has to be unspent has to go in a separate bank account. Whether that compliance has been properly done, and in case there's a not an ongoing project, other than like ongoing project, one has to ensure that that gets deposited with the specified institution as a donation. So whether the company has been complied with those reporting. Now there the reporting is very limited to amount unspent related, whereas in financial statement we have a lot of reporting in terms of what are the details of projects where the amount has been spending, and what amount have the company has spent. So those are more broader reporting. The Caro report has a limited reporting there. And now this is only applicable in case of a consolidated financial statement. So in case the company has a subsidiaries or associates and the company is following consolidated accounts, then in that case one has to give details of any qualification is there in the Caro report of those respective subsidiaries. Those has to be reported in separately in the audit consolidated accounts. Now there are a lot of time it may not be a qualification. It may be only merely a disclosures. For example, you have a undisputed statutory dues, and those are only merely a disclosures. They are not a qualification. Those need not come in this. It has to be covered under this has not. If there's a material disclosure qualification, that only will come under your consolidated financial statement. So I think this is with respect to our Caro report, and broadly we have covered all the changes which are there in the financial statement. So either we we can now, if want, we can take on a question answers then.
Yeah. Any members having any question? You can type it out on your chat box so that our speaker can address accordingly. So I have one. I just want to know the rationale behind having this amendment related to ratio analysis. Like, what can be the rationale behind this, if you are comfortable?
So like what generally used to happen, that there are a lot of inside information which the auditor or maybe the company has in terms of computing the ratios. Like many times you have a net profit ratio which has significantly changed. Now the investors of those company, or when it's a listed company, as a investor, you'll not be able to understand what are the various reasons for those behind those changes. You will be merely able to calculate those ratios. You'll be able to calculate NP ratio, but what are the reason for changes? Like there's a product mix change, or maybe there's a significant item of expense which has come. Those information was not available with the reader of the financial statement, and that is the reason the ministry was in view of having these ratios to be separately given in the financial statement. So what is happening over the period, we are now moving to more on the board related reporting. Like this kind of there, we used to always give in a audit committee meeting, we used to discuss ratios and everything, and we used to discuss on the reason for those variances. Now everything is morely coming on the part of your financial statement. Like even the aging, like for example, share capital, you have a share capital which is static. Okay, then but you have a trade payable. Now, what was the quality of trade payable? That qualitative information was not coming out with the single figures of the trade payable. Even the trade receivable, that we never used to understand how liquid the company is, like how good the data are there. Whenever the working capital investment, whatever working capital investment company have in terms of inventories or maybe in a debtors, whether those are in a qualities what we are reporting. So those kind of things are also now the ministry is asking to ensure that proper reporting is there. So that is how it is. And even there are a lot of costs. One has to be careful in terms of your costs. Other laws also, like as I mentioned, your GST, you simply will be in a default when you, up till now we never used to, the GST department was not in a position to ascertain is there a creditor which are not been paid for more than 1 year. It was only when they used to do an assessment or maybe there's an audit used to, then that time it used to come in. But now with the reporting in the financial statement itself, you will be straightway giving details to your GST department. What are the creditors which are more than 1 year? And in case you have not reversed the credit, you will be in major issues then. So I think with that, I think I've answered his.
Yeah, I got proper idea. Any questions from any member? There's someone who has typed a message on chat box, Siddharth. We have to prepare two sets of balance sheet, one as per income tax and one as per Companies Act.
It will be a two sets of financial statement, but generally what we are doing in our offices, we are having a separate columns with the actual amount also, and then we are converting that into whatever rounding of requirement. There's no separate financial statement as such. You'll have to use the same financial statement. Only thing, when you are filing your ITRs, you'll have to give exact amounts there, or maybe department will change their ITRs and make it more easy for rounded off for financial statement. Right now, we really don't have any idea on how they are going to do that. Even the ROC forms also, I think, will go a lot of changes, especially as XBRL and all that. And I think our ROC has not come out with any of the amended requirements, amended forms. So there could be, may see extensions, or maybe there's a last moment rush with all the reporting.
Got it. One more thing, that was again looking at all the amendments given in Caro report, say it about reporting for Benami transaction or getting details about intangible assets or knowing more about utilizations of term loan or short-term loan. So or IPO, FPO preferentials utilization has been properly made. So I mean, what exactly they must be coming, what situation they must be having for having so much of utilization wala questions. And these have come back again. It was there in earlier in 2013 and it has come back again now. So
actually, what is happening, our entire corporate law, maybe if you look at Schedule 3 requirements or maybe Caro reporting or entire, Section 185, 73, those everything is, coming from a lot of scams which happen. Those wherever there's a, they see there's a particular way there's a scam or maybe some misreporting or something. You have a certain scan when the funds were given to their associate company and were not reported anywhere. So the government realized those kind of report we are lacking there. So they try to plug in those reporting requirements. So whenever there's a issues with any corporate governance, those they try to plug in the financial statement. So that is how it is. So I think we have a more and more such kind of reporting, and this will keep on increasing once we have more, there's an innovative way of people do misgovernance. So we will have met different way, like a lot of amendment will keep on coming in your Companies Act or maybe Schedule 3 accounts. So that I think we'll have to live and we'll have a very dynamic reporting, because I remember in 2013 we had done a Caro report, and then straight 2016, 3 years after, there was a amendments again. 16 we have an amendment in 2020. But if you look at the history before 2013, you will not see a lot of changes in your Caro report. That was stagnant for a lot of long time. We used to call it Mao Caro, I think. and that has not changed. But with the change in a lot of different innovative ways of governance issues, I think this are also now changing on a very rapidly now. All changes have been very fast now, and the government is very proactive. Like whenever they see any issues, they immediately come out with this kind of plugging those things.
Got it. Got it. Any other query from any members who are attending the session?
Sir, I want to ask one question. In one of the presentation, you have said that quarterly statement or given to the bank needs to be verified, and if there is a variation, then we have to report it or just inform that there is a variation and why there is a variation.
So we have to report first of all whether your company is regularly filing or not. That is one first reporting which is required. Apart from that, you have to compare your reporting which has been there with the which you have filed with bank. Compare it with your accounts, books of accounts. See if there's a variance. If there's a variance is there, you give a detail of reason. What are the reason for that? So like it could be like as mentioned that the company has not done a proper FIFO method of valuation. For the bank purpose they have done an average valuation. Whereas when you do in accounting financial statement, you do on the say on a first in first out or not on average method. Then those reason also one has to give. So if there's a quantity is reconciled, but the valuation method is different, then you give a proper justification for that. Like even what we used to do in our client, we used to tell, suppose now your limit is say X amount, and you need an debtors and credit that the working capital say X only. You don't need beyond that, and actually your working capital is more than that as per 31st of March on a particular day. We used to advise our client that you restrict yourself whatever limit you require. Don't go beyond that. But now that will have a challenge again because there will be discrepancy between what I have reported with bank and what is there actually in physical in the books of accounts. So we'll have to give a justification for that. Like what are the reasons not there's a mismatch.
So we don't have to qualify the report, no? We have to.
It's not a qualification. It's a disclosure.
Disclosure, yes.
However, if you see a lot of material changes and on a regular basis, this kind of issues are there. Then maybe you have to assess whether the internal control is properly there or not. Like what are the reason for such a regular misreporting? One can understand that we misreporting in one particular month. Okay, but in case there are regular misreporting in each month, though you're not verifying each month, but there's a regular misreporting, there could be an issue with your internal control system, and then you may like to qualify the internal control aspect of that client. And if regular like mismatch, one has to go in detail. What is there any like some wrong thing is happening with the company, and they are deliberately doing this kind of misreporting.
Okay. Okay. Somebody has raised their hand. Yogesh, please.
Yeah, Mr. CA Umesh Narvikar, I'm just allowing you to unmute your mic.
Yeah, it's very nice session, very elaborative and very detailed. Thanks for the same. Just one small thing, all these amendments will take effect for the balance sheet ending March 22 or 23.
So this all amendments are not from 23, certainly not from 23. They are from 22. However, for 22, you have to give a comparable figures for 21 also. So you will have to go last year also, do a recheck on your financial statements, and accordingly give a comparative figures. So what we have started in our offices, whatever key clients are there, where we see that lot of disclosures that will be coming in henceforth. We have started recasting our old balance sheet of 21. Started preparing a Caro report on a draft basis. Wherever we were challenged that what details are not available from our audit files and all that, we try to check whether the client will have those details or not. So that is how we have started at least educating our client. And I think we all have to educate our client, especially for the Schedule 3 requirements, because those have to be prepared by the management and they will be responsible for those reporting.
Apart from this, one more thing. This small companies or anybody got the exemption from this, or is it compulsory for all?
With respect to Caro, there's an exemption to small companies. Okay, they are not supposed to have Caro, but for Schedule 3 requirements, they are applicable to all the companies. irrespective whether it's a small company or a dormant company or a company with a limited operations. Only exemption is available to a company which are specifically covered under different statute like banking, insurance, and banking insurance companies.
Okay.
So
Means to say all are all are in the one basket only over here.
all are one.
So it's
If
going
I
to be increasing task. But see, along with that, we will have to increase our audit fee also. I think we request all the members to see that if you are doing such a mammoth task and certifying all the details, I think the audit is going to be very detailed audit. And then according to the fees to be charged, even if there is hardly any transaction in the company, even if that case, you need to charge handsomely to the audit company. Otherwise, it will be difficult to defend with the time requirements and all these things in compliances as far as auditor is concerned.
Absolutely,
Yes.
and I know moreover initially now I think our now first focus should be on improving the image which we have been there are a lot of issues in terms of our image building which is happening in terms a lot of question marks are there on audit quality, though everybody does give their best and they may be doing proper justice to their work, but there have been a lot of questions of late have been coming on auditors. I think first task should be on our head to ensure that we do compliance to a proper level. We do our documentation properly, we do our thorough job on auditing. We don't do not come on the pressure of the client or maybe it's a top client. I need to maintain him. And those days are not gone now gone. We have to ensure that especially those clients which are very big, like in terms they have taken a term loans or loans with the banking, or maybe they have a public money which are their private equity they have. There, we have to be very vigilant. We should ensure that proper disclosures are there, or proper disclaimers are there, and quality of the financial statement should not be a question at any point in time. And the audit work has to be properly maintained. That has to be ensured at least for those which are very top clients, and that is how we have to improve our image. I think over the period now.
Absolutely, rightly said, definitely.
And
Even though you do good work, it is not properly disclosed or documented or displayed. Rather, initially, right from the beginning, it is said that CAs are not good in displaying their qualities and abilities or communication. Same thing happens sometimes also, even if you do a lot of good work, it is not communicated to the various stakeholders, and then the targeting of chartered accountants or the auditors are always been done. No issues, still we'll fight with our strength with all these challenges and we'll come up with the bright colors, definitely.
I just want to add here, like now a lot of members have difficulties in terms of preparing this financial statement with the proper disclosures and all that. Okay, there are softwares available in the market, and at a very reasonable rate, which gives a direct import from a tally accounts. If the company is maintaining tally accounts, they give a direct import from a tally account, and they give their best schedule 3 formats, okay, in the new revised format, along with ratios and everything. So you just have to import a trial balance, and the lot of work is being automated. I request everyone, if you have a challenge there on preparing or maybe standardizing your software, there's one software in Ahmedabad based company which is called Black Horse. Okay, I of course I don't have any interest there, and we even don't use that software, but I've seen their presentation and everything, and it's very nicely prepared. And there are some seminars in the when you do if you check on YouTube, there are some seminars which are by the WRC on how to automate your financial statement with the tally trial balance. That is also very good seminar. If you are good on Excel skills, then that can help you. Otherwise, I request everyone to at least start using some softwares, start using some technology. Now the days has gone. Then we always used to rely on our Excel trial balance, trial balance printing. I think we should, and now the time has come that we also take over on the technology. Otherwise, technology will take over us. So there are a lot of softwares. I request everyone to explore that and start using that softwares now.
Yeah, that's great. Sure. Thank you.
Okay, sir, one last question in the line of what we are discussing right now. The auditor is a watchdog and not a bloodhound. Do you think that auditor is still going to find this particular statement relevant for them to complete their audit?
Theoretically, yes, but I don't see now with the way governance is changing, the way people are pointing auditors. Like, I was reading ILFS ka jo, there was a report of funding by and NAFRA. Now there also, like, if you read, they are gone in such a detailed manner. Like, they have asked, they had this the audit firm had this review by the different partners. Now they were questioning what was the reason there was no change in those review partners. What was the reason there is no change in the internal audit partners? So there are a lot of things, which now I think gone those days when we used to, at least, on a paper we will always be able to defend that we are not a watchdog. But now the time has changed. We'll have to ensure that we do our justice to our work, and we don't let any stone unturned as such. So I think we need to be gear up to those kind of reporting requirements. And as I told you, especially where there's a public money involved, you have to be very careful, especially the borrowing is from banks, and there's a company has gone for a listing or something, and or maybe private placement is there from with a lot of number of shareholders. You do proper justice to your documentation and auditing aspect. Main thing, generally a lot of time what happens is we get into pressure of client. How do we maintain client? How do we ensure that we continue with the same clients? But then you also take a risk of misreporting then. Yeah. So I think I try to cover everything in a short time as such, whatever is there. I could have gone in detail, but then I thought we are very late if I start giving in a very detailed manner. I think in case you have any questions or you want to discuss any in detail, we can always do it off the records. And do let me know if you want to have a detailed discussion on any particular point or something.
Yeah, so we are open for question now. If any member has any question, they can raise their hand, and I'll ask you to unmute. Give you an access to unmute. So if anybody has any question, you're free to ask now.
I'll just share one of my experience with respect to your this reporting with the stock of company. Now that has been created so much of issues with the listed entities. Now a lot of companies have been asking our firm to get the database of the company which has been struck off. Now they may not have a transaction with them, but there's an audit opinion. Maybe to satisfy the auditor, they want us to verify those whether any company has been listed struck off in the any of the ROC. Now multiple ROC are there, multiple reports are published with the PDF format. It is how do we have a challenge there also. I think there also a lot of companies are coming up with softwares or maybe a uniform list of all the companies. So in case you have listed companies, ensure that you are also verifying whether any transaction is there with the stock of company. Again, aging will be a big challenge for all the auditors, especially disputed, undisputed. Again, MSME, non-MSME, certain bills are disputed, certain bills are not disputed. Proper billing wise aging will be required. So a lot of challenge will be there, and it will involve a lot of time will be get involved in this thing. I think proper will be like we educate our students or maybe person who are going to execute actual financial statement preparation or maybe verification. We take their help also. Then we educate them also properly.
Okay.
So
Any further questions?
Yeah, we are waiting for some questions to come. We'll wait for another 30 seconds. If there are no questions, we will proceed with the vote of thanks. Siddharth, will that be fine? Yeah.
And I've shared format of financial statement also, which is we are used on our financial statement for our clients. I think you can share it with our members. Anybody who wants to use, you can use that. Plus, but I request everyone to do a proper diligence on the proper Schedule 3 note, guidance notes and everything. In case there are some errors in this, I think I request everyone to please rectify them and properly use that. We have tried to ensure that there are no material error, but there could be some human error. So I request everyone to use properly with a proper diligence there.
Definitely, sir. As Narveka sir said, it was indeed a good in-depth analysis of the Schedule 3 and Caro. Now, going ahead, I request Yogesh to give vote of thanks.
Sure. Thanks a lot. On behalf of all the members, I want to express my vote of thanks. In your presentation today, you have given us updates about amendment in Schedule 3 as well as Caro. A few of those are details of amendments related to trade creditors. The most important amendment was related to ratio analysis for last 2 years, cryptocurrency details, willful defaulters, relationship with struck-off companies, title deeds of assets not in the name of company. Few amendments related to Caro, which are proper records of intangible assets, title deeds of asset not in the name of company, reporting of Benami transactions, step taken for overdue of loan given, details of undisclosed income, details of defaulted loans which has been borrowed, proper utilization of term loans, short-term loan utilized, proper utilization of IPO, FPO, preferential allotment, and many such amendments. So I would like to give you a special thanks and gratitude, Mr. Ameet Chedda, for giving us such a valuable inputs. I just want to end this session with a powerful message for all the auditors out here. We all are auditors, so why can't we just tell one thing to our clients, that let's just assume we all are always right. Signing off, this is CA Yogesh Bhandari, your coordinator today. Thank you.
Thank you so much.
Thank you, sir.